Welcome back, everyone, to Vox Markets. My name is Paul Hill, and I'm delighted again to be able to speak to CEO Sara Barrington of Verici DX, a next-generation medical diagnostics firm focusing on the global kidney transplant market. So big welcome, Sara.
It's a pleasure. You know how much I enjoy coming back.
Yeah, well, big congrats too on that fundraise you did in July, the £6.35 million and the inline results, the first half numbers that you put out on Monday. So maybe we can start there. I don't suppose you could just quickly walk us through the sort of the progress on that commercialization strategy of the sort of the lead product, Tutivia, now that you've got obviously, plenty of cash in the bank.
I love the expression plenty of cash. I'll argue with you about that later. Yeah, I mean, obviously interims are always a little bit funny with a sort of rapidly growing company because nobody actually wants to hear about your historical numbers. But that year-on-year comparison was about 9 times growth in numbers. Obviously, we started with a much lower base last year, but yes, we're off to the races, and that's the good news. We got fun, the post-balance sheet events that everyone's really focused on are really quite exciting for us. Clearly, the raise was post-balance sheet 2 months ago, and that sort of gets us a cash runway into the second half of next year. So great stuff on that. That enabled us to start tackling some of the things we need to do for commercial growth. And we have done that. So really promising signs over the last two months since financing. We hired 2 new incremental salespeople. I'm happy to chat about that. We've recruited a third one with turnover from our existing salesperson. We're getting a commercial clinical person on. They're starting next week. So the team's coming, and I'm very excited about that. We saw some really good progress. Admittedly, it's it's very small data point time-wise, but we saw an increase in Q3 of 9 centers being opened, 3 of which from one of the new salespersons. So they're hitting the ground running. It's fabulous news on that. We saw, obviously the other aspect to our growth is getting more clinicians on board from the existing centers, and we saw a 19% increase in that as well. So although the kind of volume was flat quarter on quarter, obviously we're expecting that to change quite dramatically in Q4 with all of this kind of opening up and starting and new people. I'm absolutely thrilled.
Yeah, and what's the sort of the balance of the strategy between increasing the depth and usage of a particular transplant center? So once you're in there, upselling and encouraging the reuse against obviously increasing the number of centers, because you've got, I remember last time you mentioned you've all got Medicare approval, and that covers like 2/3 of the market. So you want to get to as many centers where they do Medicare producers as well. So what's the balance in terms of you managing your cash, managing your new hires, the coverage, depth, and obviously new center coverage?
Yeah, so obviously the first thing we do with a sales force is you create the territories, and we did a redo on that and a prioritization, and we've hired in those appropriate areas. So we have up in the Northeast, we have in the Midwest, we have down in what we might call the Southwest, and more Texas, Phoenix area, and Southeast covers Florida. Obviously there are key markets that we don't have coverage. California being one of them, for example. So we prioritize people into territories, and that's the first thing. Then we recognize that obviously you go through a sort of funnel of process on bringing a border. So our definition of a site onboarded is when they're in our customer portal and they've got a collection kit. So that's the kind of, okay, we're ready to go. We've done the sales cycle on that. Then what we've experienced is sort of the general rule of thumb is you're going to have one clinician who's your champion that wants to try it. So you put them in the kind of what I call the onesie twosies, orders, and they say, okay, I can see the performance, I can see where I want to use it. They start, trying some various things. Then they'll do recurring, and then they'll talk to their other fellow clinicians. In some centers that may be nobody else, so it could be one other person. In others, it could be 8 or 9. So, a real variety of centers there, and reflected in our open sites. Once they do that, then you're getting, you've got multiple testing per patient. Don't forget, we said in the last round, a weighted average of 12 times per patient.
Yeah.
You've got multiple clinicians. And so you're getting that kind of center to really get that traction. And then ultimately you're looking for places that they'll put you in a protocol. So that becomes mandated and guidance. And we've got one center already, we've got one in the works, so on and so forth. So you can see that there's this sort of funnel. So there is a combination between opening new centers and what we might say is nurturing and growing the existing centers we've already got.
And are those 30 that you've currently onboarded, are those in your sweet spot? Because I remember you talking about an addressable market of about $900 million just for Tutivia, of which about a third was really in that complex type of difficult type of transplant that your particular test, or Tutivia, works really well. Is that 30 new centers covering that real sort of sweet spot more than the average?
So it's a mixture of different sizes of centers, and yes, a lot of them are. But I want to take a moment, because this is a question that comes up quite a lot, which is, you're in 30 centers, you've got 16% of the market. Let's do the quick math on a calculator, and surely you've got enough, right? So why would you open up any more centers? And here's the reality, and we have sort of two. I'm going to show my age here, so forgive me. But I refer to two old marketing campaigns that I love. They're real, one of them was L'Oreal, because you're worth it.
Yeah.
And I say we have to go into a center and we have to prove why we're worth it. Why would you spend the time talking to us? Why would you spend the time putting on a new test? And I think that that's kind of fairly well established. And that's the kind of third approach, which says we're really worth bringing on board, right? Then there's the second campaign that I want to refer you to, and this was the old one, which it says you don't get fired for buying IBM. Remember that trust equation, right? So compelling as a marketing campaign. And I said, well, this is fundamental to healthcare. Healthcare needs trust and safety, and you have to de-risk. And so what you find, and for good reasons, by the way, I don't want my doctor telling me to drink bleach, because that's the latest fad, right? So
it solves COVID, apparently, according to Trump.
There we go. So it takes a little while for that trust equation. And for that, you actually have to recognize that you're going to be a shallow adoption in multiple centers, because what you're really looking for is that KOL to KOL interaction. So out of the 30 sites, are they all going to go and talk to their peers? No. Are they all going to publish? No. Are they going to go to conferences and talk, present their data? No. And so you need more than the 30 to be able to be getting that kind of adoption and that excitement and becoming de-risked as a proposition. Who is Verici? What is Tutivia? That one of our competitors has 1,200 publications of varying sizes and quality, quite frankly. But that's the name of the game is to publish data, conversation, KOL to KOL, and that takes more than 30 centers. We could sit there and work with just the 30 centers, but it's not cost efficient, because the length of time that would take to get the depth that you want for your, back of the calculator revenue number, we're carrying a corporate overhead. And so it's not efficient. It is more efficient to spread ourselves a little bit more widely. But as you can tell, we're not going after all the territories. We don't have a national sales team. We are being quite focused.
Yeah. No, I would have said, I mean, I haven't gone into that sort of level of detail, but I would have said, given that you've got Medicare coverage of 2/3 of that transplant market, which is what, 28,000, 29,000 transplants in the US every single year, then because that's the highest price and it covers all, I presume that Medicare covers all of those transplant sectors, then given you've got a green light from Medicare to do those tests, yes, you've got to influence the key opinion leaders at each one and the surgeons and stuff, but you'd be missing a trick if you didn't cover more and get a large portion of the Medicare coverage, which you already have and they like, obviously, because they spent 12 months doing that assessment on you.
And that was a big review.
Yeah, so they must like you.
So the good news is, obviously, we've got experience now being reimbursed by Medicare, and we are. It's straightforward.
Yeah.
Between Medicare and Medicare Advantage, we're being paid well under the 30 days. mark, and we're getting that price. Yeah, minus the 2% tax. There's always tax, don't forget.
Yeah.
But when we're looking at our effective rate, this is what looks like it's a lower amount. And the reason that the other part of the segment, and by the way, every single center has both Medicare and private payers, so there's always that mix. And when we're looking at that other side, we said in the early days, we're going to make a very small assumption on what we get because we've got no real experience. We don't know what the denial rate will be. David will tell you there's 6 variables that go into revenue recognition. And so, and we only know for certainty one of them, which is the Medicare price, right? The split between Medicare and private, what the private are going to deny, what they're going to pay when they do. Don't forget our list price is higher than the Medicare rate, but they like to discount it. So where do you end up? We won't have, good quality data until at least the end of this year and probably into next. But we assumed quite a low rate on that. At the moment, we're doing better than that. But who knows over time where that will kind of settle in. But yeah, we have to look at, I am really quite focused on centers where if possible, and we get that entry point from a KOL, it's really a high bonus if they are high Medicare, Medicaid state center.
Yeah. And then just on actual volumes of Tutivia, I think in the first couple of quarters you did about sort of 300 sort of tests, I think, and then you did a similar number in Q3. How would you see that progressing going forward in terms of, given you've got the new sales guys have hit the ground running, they've put in new centers, increasing the depth, and then gradually getting more centers as we go through over the sort of the next 18 months? How would you see that quarterly sort of like volume? Obviously up, but it just like give us people just a feel of scale.
Thank you for that. I'm not sure I would look at it necessarily. I don't want to give a quarter on quarter number because we have seasonal variations and you can get too stuck on quarter numbers. And luckily AIM doesn't insist on quarterly reporting. But as we look at the general rule of thumb in companies of our stage, we always talk about, and you have to be properly resourced as well. They can't do this on just fumes. But, given that's a given, we generally have a rule of thumb that companies of our stage should double every year, right?
Oh, okay.
And maybe even treble, right? Obviously, you've got to have the resources. If we're partially funded, we'll partially, get the results on that. We're good, but not that good, right? But I think you can have a rule of thumb. I will tell you that what we did see, and it's it's on low numbers, so it's a high percentage, but still, it was really promising green shoot of growth. Was when I excluded my top 5 centers out of our ordering centers. So the ones that are really up and coming, quarter on quarter, we doubled. It was 106% to be precise, but we doubled that number. So we're kind of on track and for those kinds of metrics. And so, obviously the more mature you get, the less you're going to double, but we are trying to sort of keep to that metric. And that's what the team is really focused on trying to deliver. Will we do that in Q4? I don't know that it will be double, but we'll give it a good old college try. But the point is that we're out there trying to really kind of grow those centers and territories.
Yeah, okay, good. And what's the sort of the break-even sales ratio or sort of sales number for the company on a sort of like EBITDA or on a cash? I did see it was about, I think you did, was it 3.5 million? You had operating expenses about 3.5 million, I think, in the first half.
Well, here's what we look at, and break-even is a bit of a movable feast, as you know, because it depends on how much upfront investment you're going to put into growth. And I always cite, the pain that the markets went through with Amazon when they were like, you're not profitable. And they were like, yep, because we're investing to take over the world. And they did. So, you have to be conscious of that kind of equation. And at some point we have to have that discussion in this company, how much investment in the sales force do we want to do? But rule of thumb, what do you want to know? Well, we've put it in in a fairly steady state, I would say 12 million.
Right, okay. So so effectively about just over 1%, 1.5% maybe of the total addressable market would be breaking even. And then your gross margins, is it around about 70%? So then you get
70, 75%. Yeah, depending obviously what that effective price comes in at,
Yeah, okay.
because if it's higher than the 1961, then it will be kind of all to the gross margin. But yes, it's a very healthy gross margin.
Okay, so good operating leverage.
Mm.
Okay, let's move to the other test, Clarava, or the Petra test that has been licensed out to Thermo Fisher. Can you just give us a quick update on how that one's progressing and when it's likely going to get? I think you've got all your milestones, and it's when you're going to get your first royalty revenues.
We've got one more milestone to go that's
Oh,
volume based, and we pushed it outside of our forecasting periods now, just so that it didn't give kind of lumpy kind of what did you call it, effect into our
effect,
numbers.
yeah.
So now not much has changed in the last 2 months. So when we were out financing, we said, look, we're working very closely together. The cooperation between the companies is phenomenal. We put the sales teams together at the last conference so they could get to know each other, swap numbers, that sort of thing, and do some training and some bonding exercises. That went incredibly well. We do joint marketing efforts. Obviously, they're really waiting to go full tilt, and when they've got the publication, that's going through the peer review process right now, which can take a little time, and we're all a little bit tacky fingered about the whole thing. But once that's out, they'll probably go full tilt. So we're looking into next year. Obviously, but they are trained, they're out there, they're seeding the market, they're doing all the stuff that we did in the early days, looking for interested clinicians to be their champions. What can we do logistically to sort out these sort of, little issues that are going to trip us up later on, all of that stuff. So they're laying down the groundwork very nicely, and that has continued in the last 2 months.
Yeah, don't they sell? And then we're selling to the same clinicians that you're selling to, and the key opinion leaders for your for Tutivia, or is it? Or am I just sort of overthinking it?
There is a slight nuance. So yes and no, and here's why. Yes, they're all transplant clinicians, and that actually covers both surgeons and nephrologists. And actually, center by center, who orders what is a slightly different mix in every center. But if you were going to do a, crew division, they would be more interested in talking to the surgeons because it's all about pre-transplant. And we would be more interested in talking to the nephrologist who's got to do the management post-transplant. But quite often we go to joint meetings where they're both there. And so we like to try and go together and present. Certainly in the symposiums, we're talking to both audiences on the same technology, just different tests. And so that's why there's been a lot of synergies in working together.
Yeah, and when that when the review paper does come out, I presume they're already seeing all of the transplants. I mean, you've got onboarded 30 out of the 200 odd transplant centers in the US. Presumably, they're already, because they've got tests already going into these. They know all these guys, don't they? Know all the centers. So there must be a synergy between the two. I.e., they can help you get into the other centers for the Tutivia, I would have thought. I mean, they have to go on.
We certainly swap contacts. They some of their other products in this space go to the lab, so they talk to lab managers. So there are different call points all around. But yes, there is, a general kind of there's only so many people to talk to in transplant, so everybody helps everybody else out, and including us. We do ride-alongs with other reps in other companies that aren't in the diagnostics, when a pharma or something like that.
Yeah.
Shared learning. There is quite a tight community here, and if you're friendly, you're friendly. So
yeah. I mean, presumably, if there was an area that you would struggle to get into on your own, and they're already in there, then there must be a commercial arrangement that you could work together to they sell Tutivia into a transplant place that you can't get into. Then there must be some sort of
well, we could formalize it, or we could do what we actually do, which is phone up and say, would you mind making an introduction?
Okay, right, fine. Okay, much cheaper, I suppose. Yeah, you're right.
It goes both ways.
Yeah, okay. And then just finally, in terms of sort of other products and other opportunities, anything else under the Verici bonnet at all that the investor should? You obviously got your Tutivia and you've got Petra, and then is there anything else that would be near term?
We always talk about our urine program. We talk about our Protega. That's
Yeah.
That's just 2 months further down the line. Both
Yeah.
of those, nothing much to say there. But those are exciting programs. But obviously, in a small company, they do come behind the big push at the moment for our lead product. And obviously, services. That can be lumpy, and you're waiting for other people to push their business through your lab, so a little bit outside of your control. But we have made some very interesting inroads there as well, and hopefully some good announcements in due course. But yeah, we continue. Yeah, we have this phrase, which is we'll talk to everyone, and we
Okay.
do. Yeah.
Okay, good. All right, fine. And then just in terms of the final sort of outlook for the rest of the year and looking into 2026, sort of key messages for investors to sort of like watch out for.
Yeah, there'll be a couple of things. So one, as we now are addressing, we've done the Medicare check, and now obviously Medicaid is there's various states that wait for you to have some claims to register. So we're ticking those off. Tick. But obviously, really, our main push in reimbursement now is thinking about the private payers. And there are actually some nuances to the underwriters. There's 5 underwriters. They also do Medicare Advantage. So they're kind of used to our tests through Medicare Advantage, or they're getting it. So that sort of flip between Medicare Advantage to their own payers. It's not as high as a novel approach. So that's good. And there's certain nuances that there are jigsaw puzzles. They don't do everything themselves. They do outsource bits and pieces. One of them is that they sign on PPO. So 2 types of insurance. One, like the NHS, you have to go to GP to get your referral, or one you go directly. The PPOs you go directly. It's very popular. And there are networks of PPO organizations for contracting, and they do some of the work. There's what we call LBNs, which is about managing the benefits. So they're part of the process. So you'll see us as we go through this, putting little bits of jigsaw pieces in place. So obviously, anybody who doesn't understand one of our RNSs or where it fits in, please go through the IR email and ask the questions. Always happy to explain if we haven't done it well enough. So look out for that. Look out for the last regulatory clearance. When that happens, we'll be able to do that last piece of that puzzle, which we're looking forward to. Obviously we'll try and do a little bit of, I'm not going to obviously give a press release every time we open the center. I think we've become quite the pest at that point, but we'll try and give indications along the way of pieces of good news. And also, as I always say, follow us on social media. We do try and give, we show when we're at conferences. We'll try and highlight some of the press bit that we do, the PR rather than the IR. We're busy. And I always want to say to people, I'm both a externally facing CEO and an internally facing CEO. So when I go quiet, it's normally because we're busy. And I can promise you that my team have already started putting me on the road for when I get back. So, some of this will be, just being part of the sales team and helping the commercial team in their endeavors.
Yeah. Has there been any impact at all from what Trump has done with the health insurance, the things like United Health and people like that, with their cutting some of the reimbursement codes or reducing all that kind of stuff? Is there anything at all that's impacted the company there? Have you seen anything?
So what I would say is a couple of positive things, just as background. So when you look at each administration's priorities in healthcare, you kind of got to know where your product sits. In the first Trump administration, they did an executive order in kidney and transplant. So that was great, and it promoted more usage. I think their philosophy is particularly transplants cheaper than dialysis, ultimately to the overall system. So let's promote it. And we saw that with CMS's this IOTA, or the initiative that said double the number of transplants in 3 years, right? So what we see is this administration is more fit. Kidney disease kills more people and more Americans, more problematic than cancer. Biden administration was focused on cancer. This administration tends to be focused on our area, cardiovascular, kidney, and metabolism is kind of the third area in that sort of grouping. And transplant tends to do better than dialysis in terms of cost savings. So what we are seeing is, some of the areas which are being seen to be a cost burden to the system might be, a little bit more problematic so far. The CMS reduction in force was, I think, 10% less. Okay, that's, corporations are used to doing that all the time. So we're not seeing anything there. We're seeing a lot of chat about Medicaid. That hasn't really affected us as yet, and may not particularly. I think that's just a balance between state and federal. And we're seeing that, realistically at the moment that we're in an area that seems to be relatively quiet. And that's really what you want. You want it to be quiet and consistent. That's what businesses really like. They don't like uncertainty. So, what happens tomorrow? I can't tell you, but so far so good.
Okay, well, that's a real good place to finish. So thanks very much, Sarah, and very much look forward in touching base again in a couple of months' time.
Thanks a lot, and thanks to Steve. Yep.